Hi guys, I'm Stephen Edwards. I'm the Director of Chapter Tax Accountants. So today I thought I'd do a short video, which is part of my accounting coach sort of program and educational resources and material, which is all about educating small business owners and entrepreneurs in knowing the numbers in your business, becoming more financial literate. Because we generally believe as accountants and also as a business owner myself, it is the foundation of having a successful business. They reckon something like 60% of businesses fail in the first 5 years in the UK and America, and I can almost guarantee a huge percentage of that is going to be financial problems, not really understanding your numbers. So we're helping you sort of learn a bit more about the numbers in your business. So I want to talk today about gross profit and cost of goods sold. So a lot of people know what the top line means, or revenue or sales. That means the top line, which is the money you bring in before you have any expenses. So literally the top line is your sales or your revenue. A lot of people know what their net profit is. That's after all of your expenses, but not a lot of people know about their gross profit. So your gross profit is after your cost of goods sold, or your COGS, some people call it cost of goods sold. And it's anything that's relating to, if I'm buying and selling an item, if I'm a used car dealer, part of my cost of goods sold will be buying the cars. That's part of my cost of goods sold. So if I run a car dealership, if my top line is £500,000 and it costs me £200,000 to buy, probably a bit too little. Let's say it cost me £300,000 to buy the stock, to buy the cars. My gross profit is £200,000. So my sales are 500. It's cost me 300 to buy the cars, and I've made a £200,000 gross profit. And that's basically what it relates to. And that's before we have all of the overheads. Overheads are generally administration wages, marketing, generally marketing, accounting costs, insurance, travel, all of the other sort of costs associated. But sometimes, as part of your cost of goods sold, it can be staff, wages. So in our business, we're an accounting business. So we consider anyone who does client work, so the bookkeepers, the accountants, the payroll people, anyone that does client work, that's part of cost of goods sold. So me now, doing this video, my time, or if part of my wages time was doing this every day, that would not be part of cost of goods sold, or wouldn't have any impact on my gross profit, because I'm not producing accounts. I don't charge clients to do these videos, if that makes sense. So let me give you an example. So let's look at hairdressing salon, put some numbers together. So let's say, for argument's sake, you've got £200,000 worth of sales. Let's get rid of this for a second. And you've got £150,000 worth of expenses. You've made a £50,000 profit, which is fine. Everybody understands that. Here's the top line, what we call revenue, top line, your sales figure. Here's the bottom line, which is your profit. Ignoring, if you're a limited company and if you have a salary and all that sort of stuff, ignoring that for a second. But what we want to do is we want to drill in a bit deep and break this down. So as part of your cost of goods sold, you might have materials. And if you're a hairdressing salon, this might be your shampoo and your products, etc. So let's say that is 10%, which is £20,000. But you might also have wages. So if you're big enough to have a £200,000 turnover business as a hairdressing salon, you're probably going to have staff costs as well. So making up a number, let's say your staff costs were, so we do staff costs. Often when it's staff that contribute directly towards the service, we might call it direct wages or direct costs. Let's say that's another £50,000. I'm going to zoom in a little bit because I'm quite aware a lot of people might not be able to see this. There we go. It's a bit better, isn't it? So, okay, so that's your sales, and we're now making up your cost of goods sold. So your cost of goods sold in total are going to be £70,000. Let me just put that in a little formula. So your gross profit, let's now change this to your gross profit, is £130,000. Okay, so I'm not kind of explaining are these realistic numbers or not, because it depends on your industry. I just want to really give you an example. And if you wanted to have a gross profit percentage, it's going to be what your gross profit is divided by the actual turnover. So the gross profit percentage would be 65%. It's probably a bit high. So I'm going to tweak these numbers, being a creative accountant, and let's pretend actually give you more realistic numbers, more like 70 or 80,000 pounds. Probably very labor intensive if you run a hairdressing salon. That looks a little bit more realistic to me. So we've got a gross profit of 45%. I can put a percentage figure on that. But actual physical gross profit is £90,000. And that's all it is. It's that simple. However, you've obviously got other expenses, and I'm not going to break that down, but it's going to be things like accounting costs, insurance, marketing, administration. You could even have other salaries that are not hairdressers. So there may be admin staff potentially in the overhead section. So to get back to our original profit, which I believe was £50,000, let's put in some overheads of £40,000, and that gives you a net profit of the £50,000 we started with. So it's very similar to what we started with, but previously what we did was we simply added up the 40 plus the 110, and we called it expenses. Spreadsheet doesn't like that. And we called it expenses, which was 150k, these two numbers. What we're doing now is we're splitting it to get a gross profit. And that's really key. It's one of the most important trends in your business. And when I talk about knowing your numbers, the sort of thing you want to be doing is quarter one, quarter two, quarter three, and you want to be having a rolling data for at least 2 years, really. Quarter four. And what you can do is you can say, right, what were my sales? What was my cost of goods sold? What was my gross profit? And what was my gross profit percentage? So I'm just going to make up some numbers. Let's say it's £50,000. And it was £30,000. I'm just going to make that a minus so I don't confuse people. 30,000 as a percentage, that is 40%, which is about right. And what I'm going to do now is make up some more numbers, and you can have a trend. So I'm on purpose, because we had a £200,000 profit. I'm not actually trying to agree it to these numbers. I'm just trying to give you paint a picture, really. So let's say 60,000, and let's say this was 40,000. And that's 40, 1, 2, 3. Let's say this was 45. Let's say this was 35. Let's say this was 50. This was 30. So hopefully you can get the picture. So your gross profit percentage is changing. This is a really important stat. Like I said, one of the most important stats in your business. If you're overpaying staff, or you have idle staff that are not efficient, not effective, or you're paying staff at a higher level than what you need, you could get away with, I always talk about the building trades, and you don't want to be paying a labourer a bricklayer's wage. And I'm sure a lot of builder people can relate to that. And these percentages will really highlight, your trend, and are you overpaying your staff? But I've spent a lot of time talking about wages. It's not just wages, it's also materials. You could be a business that you're an Amazon seller, you don't have any wages. We have very little wages, and most of it's actually buying your goods, and you're buying your goods from China, wherever they are, and you might have a smaller gross profit percentage than 45%, but it's very high margin, and that's where you get your sort of bottom line. That's it, guys. Any questions, make a comment, or just get in touch with me. Thanks.